Welcome to Module 2 of Public Finance. So in this module, we will be discussing about externalities, and these are the learning objectives. So first is define an externality and explain how positive and negative externalities can prevent efficiency from being achieved even when markets are perfectly competitive. Number two is describe how corrective taxes and subsidies can be used to internalize externalities. And third is explain the Coase theorem and its significance. So let's discuss. Let's define first externalities. So externalities are costs or benefit of market transactions not reflected in prices. When an externality prevails, a third party, bukod sa buyer or seller of an item, is affected by its production or consumption. So the benefits or costs of the third party, either a household or a business, are not considered by either buyers or sellers of an item whose production or use results in an externality. So this let's discuss negative externalities. Negative externalities, also called external costs, or cost to third parties other than the buyers or the sellers of an item not reflected in the market price. So remember ha, third party, ito yung hindi siya buyer, hindi rin siya seller. An example of a negative externality is the damage done by industrial pollution to people and their property. The harmful effects of pollution um, are impairments to good health and reductions in the value of business and personal property and resources. Next is the positive externalities. Positive externalities are benefits to third parties other than the buyers or the sellers of a good or service. So tandaan, pag externality, third party ang tinutukoy natin dito, at pag third party, hindi siya buyer, hindi siya seller. So ulit, positive externalities, yun yung benefits to third parties. So it is not reflected in prices. Buyers and sellers of goods that when sold result in positive externalities do not consider the fact that each unit produced provides benefits to others. For example, a positive externality is likely to exist for fire prevention because the purchase of smoke alarms and fireproofing materials benefits those other than the buyers and sellers by reducing the risk of the spread of fire. For example, yung kapitbahay nyo, hindi sila maapektuhan ng fire. Hindi sila yung buyer, hindi rin sila yung seller, pero sila yung third party. Buyers and sellers of these goods do not consider the fact that such protection decreases the probability of damage to the property of the third parties. Nung bumili naman yung isang household ng pang for fire protection, hindi naman nila kinoconsider yung kapitbahay nila. Pero dahil positive externalities ito, maaapektuhan pa rin yung kapitbahay nila by reducing the risk of the spread of fire. Fewer resources are devoted to fire prevention than would be the case if it were possible to charge third parties for the external benefits that they receive. Pecuniary externalities. So it's the effect of increases or decreases in the price of a good on existing consumers as a result of changes in the demand or supply of a good. So pecuniary externalities merely result in changes in real income of buyers or sellers. Real externalities are on price, costs, or benefits. So they are the effects of market exchanges external to prices. When an externality exists, the marginal costs or marginal benefits that market participants base their decisions on diverge from the actual marginal social costs or benefits. For example, with a negative externality, business firms producing a product for sale in the marketplace neither pay for nor consider the damage the production or consumption of that product can do to the environment. Similarly, with a positive externality, buyers and sellers of a product in the marketplace do not consider the fact that their production or consumption of the item benefits third parties. Let's discuss further about these negative and positive externalities. In negative externalities, when a negative externality exists, the price of a good or service does not reflect the full marginal social cost of resources allocated to its production. Suppose, for example, that in the production of paper, each unit of output results in cost to parties other than the buyers or the sellers of the product. Neither the buyers nor the sellers of the goods consider these costs to third parties. So the marginal external cost or MEC is the extra cost to third parties resulting from production of another unit of a good or service. MEC is part of the marginal social costs of making a good available. However, it is not reflected in the price of the good. So when a negative externality exists, too much output is produced and sold in a competitive market relative to the efficient amount. Next is the positive externalities. So when a positive externality is present, prices do not fully equal the marginal social benefit of a good or service. For example, suppose inoculation against a disease results in a positive externality. So those who are vaccinated benefit themselves, of course, by reducing the probability that they will contract a contagious disease. But they also provide benefits to those who do not receive inoculations by reducing the number of persons who will become hosts of the disease. So kung nagpabakuna ako against sa isang disease, um, yung totoo, ako lang na gusto ko lang i-protect yung sarili ko. Pero may effect siya sa other parties who are not sellers or buyer of the vaccine. Yung mga third party na tinatawag natin. Mabibigyan sila ng benefit kasi dahil nagpa-vaccine ako, it will reduce the number of persons who will become host of the disease. So, pwedeng hindi na ako makahawan ng ibang tao. So, yun yung positive externality. So, in return, it reduces the probability of outbreaks of the disease for the entire population, including those who are not vaccinated. Eventually, if the disease is eradicated in this way, the entire world population will benefit. So, the external benefit of inoculations is the reduction in the probability that those other than the persons purchasing vaccinations will contract the disease. So, yun yung effect sa third parties. Let's discuss the internalization of externalities. Internalization of an externality occurs when the marginal private benefit or cost of goods and services are adjusted so that the users consider the actual marginal social benefit or cost of their decisions. So in this case of a negative externality, the marginal external costs is added to marginal private costs for internalization. For a positive externality naman, the marginal external benefit is added to marginal private benefit to internalize the externality. So internalizing an externality results in changes in prices to reflect full marginal social cost or benefit of a good. Internalization of externalities requires identification of the individuals involved and measurement of the monetary value of the marginal external benefit or cost. So the data required for such identification and measurement are often difficult to obtain. Economic policy towards externalities is sometimes controversial because of strong differences of opinion concerning the actual value of the external cost or external benefit. So, for example, how can all the sources of air pollution be identified? How are damage done to property and personal well-being evaluated? So this is a formidable scientific, engineering, and economic detective problem because strong disagreement exists among physical and biological scientists as the costs of pollution, the necessary information required for internalizing the externality can be elusive. So let's discuss corrective taxes, a method of internalizing negative externalities. So a corrective tax is designed to adjust the marginal private cost of a good or service in such a way as to internalize the externality. The tax must equal the marginal external cost per unit of output to achieve this objective. In effect, a corrective tax is exactly like a charge for emitting wastes. So it is designed to internalize a negative externality by making sellers of the product to pay a fee equal to the marginal external costs per unit of output sold. So example, suppose a corrective tax were levied on producers of paper to internalize the negative externality resulting from their output. So this figure shows the impact of such tax. The marginal external cost per unit of output is assumed to be MEC $10. So the corrective tax T is T equals MEC. So in this case, the tax would be set at $10 per ton of paper. So the marginal external cost of paper per year. This tax is levied on each unit produced and will be treated by producers as an increase in the marginal private cost of production. Consequently, the supply curve shifts up to S1, where S1 reflects the full marginal social cost of producing paper. So the increase in cost caused by the tax changes the point corresponding to the market equilibrium from A to B. The market price of paper increases to $105 per ton, and the equilibrium quantity of paper consumed declines from 5 million tons to 4.5 million tons per year. So this is exactly equal to the efficient annual output. So the corrective tax does not reduce the pollutants in the streams to zero. It merely raises the cost of using the stream to reflect the marginal damage done to alternative users of the stream. So paper producers that use the stream now compare this extra cost, which is $10 per unit output, with other alternatives of waste disposal and then decide how much of the stream's service to use at that cost. So the tax revenue collected can be used for a variety of purposes. If the competing users of the stream are easily identifiable, the tax collected, $45 million, could be used to compensate other users of the stream for $45 million in damages that remain after the externality is internalized by the corrective tax. So alternatively, paper producers might argue that they should receive compensation for their losses in the form of a once and for all payment to each producer. This payment would compensate them for the loss of their free right to dump. So finally, the revenue collected could go toward a reduction in other taxes or an increment in government services. So in summary, the corrective tax causes the following result. One is an increase in the price of paper and a reduction in the quantity demanded to the efficient level where the marginal social cost equals the marginal social benefit of paper. Second, a consequent transfer of income away from paper producers and consumers in favor of individuals who use the recreational services of streams and of others who might have their taxes reduced or enjoy the benefit of increased government services if the revenue collected is used for those purposes. And last, a reduction in, but not the elimination of, use of the stream for disposal purposes and a consequent reduction in damage to alternative users of the mainstream. So next is the corrective subsidies, a means of internalizing positive externalities. A corrective subsidy is similar in concept to corrective tasks. The competitive market equilibrium output would be 10 million inoculations per year at the competitive market price of $25 per inoculation. This is inefficient because the marginal social benefit MPB plus MEB at the level of consumption exceeds the marginal social costs. So inoculation, ito yung mga to be vaccinated. So a corrective subsidy is a payment made by government to either buyer or seller of a good so that the price paid by consumers is reduced. The payment must equal the marginal external benefit of the goods or services. So in this case, $20 is the marginal external benefit associated with each person inoculated. Suppose the government announces that it will pay each person inoculated a subsidy of $20. So this subsidy adds $20 to the marginal private benefit of each inoculation. The demand curve for inoculations shifts upward from D equals MPB to D1 MPB plus $20. So makikita natin to sa figure. So as the demand for inoculations increases, the market equilibrium moves from point Q to point V in the figure. At that point, the market price of an inoculation increases to $30 to cover increased marginal costs of production. However, the net price after receiving the subsidy declines for consumers. The net price is now $30 minus $20 equals $10 per inoculation. This reduction in the net price to consumers increases the quantity demanded to 12 million per year, the efficient output. Ito pala yung figure. Ito siya. So let's discuss now the Coase theorem. So it affirms that where there are complete competitive markets with no transaction costs, an efficient set of inputs and outputs to and from production optimal distribution will be selected regardless of how property rights are divided. So in law and economics, the Coase theorem describes the economic efficiency of an economic allocation or outcome in the presence of externalities. Okay, so transactions costs include the time, effort, and cash outlays involved in locating someone to trade with, negotiating terms of trade, drawing contracts, and assuming risks associated with the contracts. Transaction costs depend in part on property rights to use resources. Government has the power to change property rights. So by doing so, transaction costs will be affected and will the potential net gains realizable through market exchanges. If a government lower transaction costs, efficiency will be improved in cases for which new gains from trading outweigh the costs involved in establishing or modifying pre-existing property rights. So this Coase theorem states that governments, by merely establishing the rights to use resources, can internalize externalities when transaction costs of bargaining are zero. So how does it work in practice? So ano ba to? Let's say that it's efficient to have the turbines operating in the area. Ano yung turbine? Ano ba tong turbine na to? Oops. Okay. So, Um, a turbine, ito yung makikita niyo sa picture, it is a machine for producing continuous power in which a wheel or rotor, typically fitted with vanes, is made to revolve by a fast moving flow of water, steam, gas, air, or other fluid. Ito yung nasa picture. For example, it's efficient to have the turbines operating in the area. Example, that the value to the company of operating the turbines is greater than the cost imposed on the households. Put another way, this means that the turbine company would be willing to pay the households more to stay in business than the households would be willing to pay the turbine company to shut it down. So if the government or court decides that the households have a right to quiet, the turbine company will probably compensate the households in exchange for letting the turbines operate. So because the turbines are worth more to the company than quiet is worth to the households, some offer will be acceptable to both parties, and the turbines will keep running. So on the other hand, if the court decides that the company has the right to operate the turbines will stay in business and no money will change hands. This is because the households aren't willing to pay enough to convince the turbine company to cease operation. So in summary, the assignment of rights in this example didn't affect the outcome once the opportunity to bargain was introduced, but the property rights did affect the transfers of money between the two parties. So this scenario is realistic. In 2010, for example, Caithness Energy offered households near its turbines in Eastern Oregon $5,000 each not to complain about the noise that the turbines generated. So, totoong buhay ito. Next is the significance of Coase theorem. So, the Coase theorem is one of the solutions to the problem of externalities, the other being of government solutions, through the imposition of a Pigovian tax. Competitive markets fail to produce the socially efficient quantity when there are externalities. So externalities are a cause of market failure and occur when the private market fails to produce society's preferred outcome. So when there is market failure, alternatives to the achieved efficiency in the market come about. One such alternative is the interventions by the government using law, taxes, and permit systems so that market participants pay for external costs. However, while government policy can potentially improve efficiency, there is no guarantee. So the cost theorem application comes into play in such a situation. It cautions against the assumption that government intervention in the environmental arena would improve upon private sector environmental performance. So nabanggit ko kanina, Pigovian tax, ano ba to? So it is a tax assessed against private individuals or businesses for engaging in activities that create adverse side effects for society. So adverse side effects are those costs that are not included as a part of the product markets. So, ito yung topic natin about externalities. So, for more details, you may read your module para mas maintindihan nyo. But for any questions, you may send a message or post a message in our MS Teams and our group messenger. And again, please answer the activities at the end of your module and please wait for my announcement kung saan nyo isasubmit yung output nyo. Pero as early as now, pwede nyo na siyang sagutan para hindi kayo matabunan ng activities. So this ends our discussion on externalities, which is the module 2 of our subject. Thank you.